Hey guys, Tony Denaro here. I wanted to do a very quick video for you with my expectations for the earnings announcement for AMC tomorrow, Tuesday, February 28th, after the market closes. Don't forget to tune in here live. I will be live streaming it when the earnings are released and the entire AMC conference call. Let's get into the numbers. Just to level set where we're at, I know everybody has very high expectations for this quarter due to Avatar. However, Avatar came late in December, and the Q4 numbers domestically for 2022 are $1.77 billion. That is actually lower than the 2021 Q4 numbers, which was just over $2 billion. So as I'm doing my calculations, that's kind of my starting point. It is very difficult to get a global quarterly number, so I base my model off of the domestic and then extrapolate out from there. Q4 $1.77 billion domestic is also lower than Q3 domestic, which was $1.923 billion. If we use that $1.92 billion as a placeholder to extrapolate out AMC's global income and look back at last quarter, our total revenue for admissions, food, beverage, and other was $968 million. AMC ended last quarter, end of September, with $684 million in cash. AMC's cash burn is about $225 million a quarter, give or take. And we have this note from Adam Aaron back at the end of December that in Q4 AMC raised $272 million, which will help offset that cash burn for Q4. Using those numbers and having done this type of prediction for a few quarters now, I'm coming up with a number roughly, this is just my estimate, of about $905 million in revenue for theater, food, and beverage for AMC in Q4. And with that, I'm estimating the earnings per share coming in at negative 22 cents. Some might say it should be a little bit worse than that. I think it could actually be a little bit better though because of Avatar, the IMAX, the 3D experience, the more expensive tickets, and the amount of people that came in at the end of December spending money on food and beverage. So even though the total domestic box office was a little bit lower, I think that the earnings per share is still going to come in very, very close to negative 22 cents. We had less of an impact from Hycroft mining. The share price of Hycroft translates directly into AMC's income statement on investment loss or income, and it depends on the price of Hycroft at the end of the quarter. There was only a 7-cent drop from Q3 to Q4, so that will be a minimal impact this quarter. The other thing that's really kind of an unknown for me is what, if any, goodwill impairment we're going to have in Q4. So that is not accounted for in my model. If my guess is off in a big way, it will probably be due to some impact of goodwill impairment. I am expecting Adam Aaron and the team to really talk up the upcoming launch of popcorn into retail grocery stores. This could be a very major contributor to AMC's bottom line in coming quarters. I know a lot of you are excited about credit cards. I have looked into the credit cards and compared them to comparable programs like Costco. This is not a program like the airlines. Based on my research, I am not counting on credit cards to be a meaningful contributor of either revenue or profits to AMC in any coming quarter. It is more about data mining your existing customers, and that will yield some benefits. But the credit cards themselves, I am not expecting to be a meaningful profit generator. Stay tuned. Perhaps I'll be wrong about that. So we'll find out together exactly what all these numbers are. I do want to close by talking about what I have highlighted in red here, the cash burn of AMC, roughly about $225 million per quarter. And looking back at the balance sheet, knowing that AMC has about $684 million, give or take, because they did sell a little bit of APE last quarter. When you think about why the management is wanting to do some equity raise after a reverse split, we are about 2 or 3 quarters away from running out of cash. What happens when you run out of cash? Your lenders call all your loans due, like what happened with Bed Bath & Beyond. Even if you have a couple $100 million left, if they see that you're getting close to the point of bankruptcy, they call all the loans due, and you are essentially forced to file Chapter 11. So just something that I want you to be thinking about. Hopefully there is a run up in price and we don't have to worry that far down the road. But if something does not happen in the next coming weeks or month as we get closer to that vote, I am going to be talking about this more. The projected gross domestic box office in the United States for 2023 is estimated this year to be about $8 billion. Now, clearly, if that number is higher or if a major competitor like Cineworld / Regal goes away, things could get better for AMC in the second half of 2023. But from a management perspective, I don't think that they are comfortable relying on a best case outcome scenario. They're going to plan for the worst case, hope for the best case, and that worst case planning means that they need to raise cash. Your vote in the coming weeks is important. A vote no is a vote to keep on raising cash inefficiently with APE. A vote yes is to give the company a chance to raise cash more efficiently at a much higher price, although there could be some negative impact to the common stockholders through that dilution effort. But dilution is coming with either one. I understand, I do. If you sold all your APE or the only thing you care about is a MOAS, then you might have a different perspective than someone that is interested in making sure the company doesn't go bankrupt. And that is fair. I understand. At the end of the day, guys, you got to do what is right for your investment and for your own heart. I am Tony Denaro. I want to thank you for watching. If you got value out of this video, hit the like button. If it's your first time here, buy and hold that subscribe button. And be sure and tune in with me tomorrow live to watch the AMC earnings. I will see you then.